Good morning. We are at December 24th. It is going to be a half day of trading today. And I've noticed volumes have been really light this week, as expected.
Yep, I've
Um,
noticed that as well.
yeah. And we are going to analyze some stocks. We've got, I think, a good, interesting agenda for our live stream today. And I am joined by Daryl. How you doing, Daryl?
I'm doing fantastic, Victor. Good to be here. Good morning, everyone.
Yeah, it's we're nearing the end of the year. It's been a real good year for my portfolio. It's been a good learning year. It's been a good year for the channel. And this live stream, I think, has really created I think a lot of good content. So it's been a really good year. Overall, how's your year gone for you?
It's gone pretty well, doing what it's supposed to do.
Perfect. Um yeah, and as we close out this year, you know, next year, a couple of things. I appreciate you sharing the economic data on Discord. It looks like the economy is in a good place. It's growing. It's not like, growing like crazy. Unemployment's not a big issue. Interest rates are going to drop. So, am I getting it right? Is all that in line with what you saw?
Yeah, that's what I'm seeing as well.
That kind of sets up for a good economy in 2026. And I think finding pockets of value, pockets of opportunity is going to be the difference between outperforming or, underperforming the market or just, matching the S&P. So as we look at the market, one of the things that I'll be doing is trying to find those pockets, those stocks that are like maybe over the last 3 years, they did not get bought up and make them super expensive like some stocks. Like I'll pick on some of my own that I hold. Google Alphabet's done terrific. It's up 66% year to date. We got a couple of days to go. That's great. Do I expect Google Alphabet's going to do 25% in 2026? No. Maybe it does 10%. That are near Google Alphabet that maybe are priced better, like Meta, looks terrific. Why? Because they announced their earnings and they said, "Hey, uh, we're going to spend a lot of money in that data center." And the market said, "Yeah, we don't really like that." So they sold
Mhm.
off the stock. It created better pricing. Now, did the Meta business change? Fundamentally, nope. Same business. It's growing at 26% for the last quarter they reported. Super great gross margins, great free cash flow. So it was actually and has been an opportunity to load up on some Meta shares. I own a lot of Meta and I still bought shares because it's an opportunity. And that's like the mega caps, right? Away from the mega caps, there is good opportunity, but we got to do a lot of homework because some of these stocks, the fundamentals look terrific, but they just don't move. It's kind of you end up scratching your head for a while and your capital just sits around. So we don't want to do that. I really have gotten a lot out of your technical analysis because I think it's expanding a skill set that maybe was a weak area of my game and kind of understanding, okay, I know where there's businesses that are looking good. Their financials look terrific. Market just doesn't like them. Maybe there's good reasons for it. Maybe there's really good reasons, but maybe there isn't. And it's just kind of a bunch of stories that are more fiction than fact. And if I watch those stocks and invest at the right time, then we can really outperform. And a good example of that is CVS. I don't know. CVS is probably a stock that few investors think about. It's a it's a pharmacy. It's not all that exciting. All right. Well, the money spends the same. Whether you bought a stock that is super exciting, like, whoa, man, Oklo, and Oklo's done great, by the way. Oklo does, nuclear power. Ooh, that's exciting. Um, but then you got this boring stock that's lower risk than Oklo or Rocket Lab and so forth. And it's gone up 73%. And this thing was sitting right in front of us. So I'm glad I've owned CBS. And there are stocks like CBS that are in the market. You don't have to take big risks to get good returns. You just have to do a lot of homework and see where there is pockets of opportunity. So let's go find, 5 companies that resemble CVS, or we're going to look at Citi a little later. I think Citi is going to paint a similar picture. But the stocks are out there. We just got to find them, do our homework, and then we got to know when to buy, because sometimes we could be right, but the timing, it's 2 years later when the market says, we now like that stock. Maybe 18 months, maybe 12 months. So let's kind of like pick the right time when the market kind of shows that there's a technical setup, or you have done your homework and it's a logical point to start investing. So we'll do fundamental analysis on stocks. And it looks like we already got Brucey online. He wants to look at a company. And it looks like I looked at a company yesterday that he wanted to research, but I looked at the wrong one. STO Hack. So good to see you, Brucey. Sorry for the misunderstanding. And we want to see Hacksaw AB. Perfect. We can do that. Good to see you. And we got a couple stocks that we're going to go through, but your stock is on the board. We will go over it. Speaking of things that being on the board, I think you may notice, Daryl, I put out there a little contest for, hey, can you, pick out, put your best stock that you, or I should say, select a stock that you think is going to perform the best in 2026. And then we're going to have kind of a board of, hey, it'll be fun. It's just for fun. Like, hey, so-and-so said this stock and so forth. And then we'll just track to see who got closest to the pin. And it's going to be a 12-month kind of evolution. And, get me the stock you want me to put on the board, everybody listening, and Daryl, get me a stock, put it out there, take some chances. You're not going to lose any money, but think of all the glory and that you would have being the guy that picked the best stock. It'll be fun. It'll be fun to track it. So get that out there. I put the message out on the YouTube channel, homepage. I put it out on Discord, email. I just put it out there, and hopefully I get more people responding. I've already got like 8 or 9 responses. So we got a good board going. Be nice to get it up to 25, maybe 35 names. And then I'll kind of cover it at the end of each month. I'll kind of cover it, and hey, these are the stocks that are kind of floating to the top. Now, the stocks that do well in January may not win the race, because stocks go up and down. So it'll be fun to kind of watch to see where those stocks go. All right. So wanted to tell everybody about that. And in fact, here's the list I've got going so far. So get me your name and the stock that you want me to put on the board for you, and we will put it on the board. All right. Looks like Kurt's on. Kurt, Merry Christmas. Yeah, I appreciate the comment, and really, really appreciate it. Merry Christmas, Brucey. And should be a nice day. I'll be staying up late tonight and chilling tomorrow. And hopefully you guys all have a really, really nice holiday. All right. So just a quick kind of tour of what the market's doing. Right now, the futures are flat and gold is up a little bit. Crude oil is up a little bit. Nothing big. Low volume day. That's what we expect. And we're going to close today after 3.5 hours of trading. Do I have that right? Let's see. Yeah, after three and
Yeah,
a half hours.
we'll
Right?
close at 1 Eastern for the stock market, and the bond market closes at 2 Eastern.
Okay. And then stock market's closed tomorrow and then open on Friday, if I have it right.
Yep.
The next week, the holiday calendar it's open for 3 days in 2025, including December 31st, but then it's closed January 1st. And then we're open again January, is it 5th or no, January 2nd, sorry. January 2nd's a Friday, I think. And then we're off to the races. Another year. We got to figure out how to beat the market in 2026. I think we can do it again. And doing the right research, homework, picking out the right stocks. All right. So we thought we would take a look at one stock and then go down kind of a path of research that I wanted to guide us through. But the first stock we're going to talk about is Citi. And Citi is a big bank. Citi had some trouble. I think coming out of the subprime mortgage meltdown, and that created, I think, an opportunity because this was kind of the brand, I guess, was kind of tarnished, and investors were a little reluctant to buy into Citi. The number one player in this space is JP Morgan. But it's not about, where the stock's been because JP Morgan's done fantastic. It's about, what's ahead. And this stock really has performed well for investors. Year to date, up 69.6%. That is getting it done, folks. And it pays a dividend. So you buy the stock at $69 per share. And let me tell you, your dividend yield is much better than 2%. It's more like 4%, maybe 3.5%. So the stock's paying you some income, and you are just riding this puppy up higher and higher and higher. And what's it going to do next year? Is it going to keep rolling higher? Well, let's do some homework. See what we think this stock is worth from a fundamental perspective, and then how the technicals are setting up. So this is a big cap, 213 billion. JP Morgan's gigantic, like 700 billion or so. Revenue 75 billion, forward PE 12.7. Not too bad. Not too bad. Now, as we look at 2026, interest rates are going to be lower, and it's expected that they're going to be lower in 2027. I think that's going to create more transactions for Citigroup, transactions where they make some money, and that'll be good for them. They'll also be sitting on some loans that, maybe some people are like, I don't want to go through the trouble of refinancing my home loan, or I'm near the end of paying it off. So I think the net interest margin is going to be pretty darn good with Citi. Analysts think it's gotten a little expensive. It's probably 8% too expensive, according to analysts. So this is a big bank. So when we look at their growth, it's not going to be like, NVIDIA growing at 60, 70%, but they did have a couple of good growth years. And then 2024, they kind of had a pullback, but now they're growing again. And I think that's why the stock is on a roll. It's growing its top line. It's growing, the services it provides, and overall revenue is growing quite well at 9.24%. Here, I think, is net interest income, which is their margin, is good. It's been expanding, and overall, that's good news for them, good news for investors. Now, one thing with banks, I don't use free cash flow to value a bank because it's just a different business altogether. I look at, and this is what I have researched and found that this is how you value banks is you look at their book value. And you want to see book value grow over time. The book value is all the assets on the balance sheet. And here's book value per share, $108 per share. It has been growing over the last couple of years. And if we look at the annual, it's also been growing. We want this number, the book value per share, to be as high as possible. And we want the ratio to be as low as possible. And I'm going to get to the ratio in a little bit. So that looks good that they're growing it. I'll get to the price to book ratio in a bit. Looking at the forecast, do analysts believe that Citi is going to grow? And the answer is yes. In 26, it's going to grow. 27, it's going to grow. They have a contraction year in 28. But this PE ratio is supposed to drop to single digits. I don't think that's going to happen. I think the stock's going to keep working. I just think the numbers, investors are now going to pay attention to Citi, go, whoa, that stock's really risen nicely, and I could buy it at a lower PE than most other banks. So I think that's going to be an attractive metric for investors to take a look at. The price to book ratio is 1.1. 1.1 price to book. I'm going to make myself a little note there. And that's an important ratio. What I did is I compared banks, and I'm an investor in Citi, by the way. So I used to be an investor in JP Morgan, and I thought JP Morgan's getting a little expensive, and that is fine. So when we look at, these are big banks, and you guys can see it, but it's a little small. I'm going to put it center to the screen. And okay, so the price to book ratios, Citi is at 1.1, Bank of America 1.5, UBS 1.7, USB 1.5, JP Morgan's 2.66. We want this number to be as low as possible, and the leader of the pack is Citi. We know what PE ratios are all about, and the PE ratio, Citi's not number one. US Bank is, and that's more of a large regional bank, kind of a small large bank, and they're the leader of the pack. But Citi has a pretty good PE ratio. So that's what leads me to think that Citi, of the big banks, is one of the more attractive stocks that I could consider. JP Morgan, good bank. I owned JP Morgan for a long time. I did really well with JP Morgan. I sold JP Morgan and switched horses about 2 years ago. It was a good decision because JP Morgan has done well since then, but Citi has way outperformed it. If you look at just the performance of the stock measured by, I bought it a couple years ago and my investments doubled. So I'm good. I'm real good with the stock. And I wouldn't have gotten that performance out of JP Morgan. So I'm pretty high on Citi. I think it's a good situation. It's obviously been a good stock for the last year and a half, 2 years. And I think the future looks good. I think the environment's going to be good for banks. I think this bank is in solid shape. What do you think, Darryl? What are you seeing on the technicals for Citigroup?
Yeah, let's take a look at the chart, and then I want to go back to your evaluation and just do some sensitivity analysis, see if we can't get some price targets. So if we would have to go back, and like you said, until 2008 and 9, and look at some issues that they had, and they had a big drawdown. They do have a new CEO that is really changing the culture there, and they're changing some businesses, expanding some businesses. So I think Citi is set up really nice, but as I was looking at the charts, it was a little difficult to figure out where the chart indicated any target prices, and then you go and look at the analysts, and I think they're underestimating, and it may be one to take advantage of. So I'm a shareholder as well. I started entering back here, so I'm doing pretty well with Citi. It's a small holding, and I said in a video over the last 2 weeks, I didn't know whether this is going to be a long-term hold in my portfolio or just a temporary. And the more I'm looking at the data and doing some sensitivity analysis, this could be a longer-term hold, and maybe time to even start adding some more to this particular holding. So let's look at the chart real quick. The chart's been on a really good run over the past year. If we look from the April lows until yesterday's close, 119%. We did have some resistance that was set at a high on December the 12th that has since broken out above that for the last 2 days. And while many charts that I've looked at over the last 2 days, 3 days, we've had lower than average volume, even Meta and some of the mega caps have had below average volume. Citi has not. They are above average volume and driving the price higher. If we look at the RSI, you can see that the RSI at the peak for yesterday is the same exact level that we saw when we were trading at 91. There's a lot of momentum in this stock. We did have a temporary pullback into bearish territory once or twice, but the PPO has been in bullish territory since the end of November, and I am seeing that the 26-day difference is higher than the 9-day moving average, and that is expanding at the moment. Accumulation is at a 52-week high, and we have spent all but about 5 weeks this year in accumulation, money flow positive. So, I mean, we could go back. It's really kind of hard to say, well, how high can this one go? So that's where I'd like to go back to your analysis and just have you do a little bit of math and see what the targets could be. Let's first of all take a look at the analyst targets. I think they're underestimating Citi. So if you can go back to your screen. And let's take a look. Well, I take that back. Give me back the screen for just a moment. So Citigroup, you can see that they're trading 119.4. That was yesterday's close. The high target is 134. The low is 77. The average is lower than where we're trading 1 year out. We look at the top analyst, it's about the same. And then the price to book ratio, you can actually add this right in the stock screener in stock analysis. And I only have 5 banks. These are 5 U.S. banks. That's what I'm filtering for. United States only. And this is the diversified banking industry. But you can add the price to book ratio and the price to tangible book right to the screen if you wish to do that, if you have stock analysis. So now let's go back to your screen. And let's look at that price to book for a moment.
Mm-hmm.
So you have an additional bank or 2 that I don't have, but in the 5 diversified banks. But if you look at the price to book, and just throw out the top two and then average the remaining.
All
You
right.
can do that real quick.
So it's 9.8. $1.96.
Okay. And when I only include the 5 diversified banks that I have, it's 1.77, I think, or 1.79. So that is potentially one price target that you could have for Citigroup. If you just take their current price, divide it by 1.1, because that's their current book ratio, and then multiply it by either your number or the 1.77, we're going to get a value in the 190s.
Okay.
So that's one kind of price target. Then if you go back to the analyst targets and look at those PE values, if you can take a look at that, can you go to the...
Put your screen up?
No, okay, we can do it on mine as well. But if we look at this, there's no way they should be trading at an 11 or a 9 PE. So here's another way that you could do it. They're trading at 15. If you say that they should at least stay at 15 for next year, so you divide their current price by 11.68, multiply it by 15.44, you're going to get a target of about 162. So that's what I'm trying to do here, is I'm trying to say, have they reached a peak? Are they limited by what the analysts are saying? Or can we look at these numbers and analyze them in such a way to get targets up to 162 or 192? And I'm thinking 162 is probably pretty reasonable for Citigroup by the end of next year. What do you think?
I think you're right. I'm glad you went through that thread, because I think I got to update my research. And let me show you something that you might think is interesting here. So I use Gemini AI. What is the average price to book ratio for large diversified banks? And it came up with 1.77, closer to the number you cited.
Yep.
So I'm going to update my valuation of Citi, because the average I was using was 1.26, which is an old number. And now these banks are doing better.
Yeah.
So it's kind of, okay, the market for banks has changed. So I got to update my analysis. Good stuff. I think, again, the environment's going to be good. And, at what point would I think about selling Citi? No, I don't think I'm going to sell it anytime soon, but if it starts getting a little too expensive, like I thought JP Morgan was getting a little too expensive, and then I switched horses. That was a good move. Maybe a year, 2 years from now, if I think it's getting too expensive, maybe I'll do it again. But I'll keep researching, updating my valuation on it.
Yeah, so Shadow Guy, I'm thinking the same thing. I didn't know what to do with this one. It's run up pretty large, but the more I look at it and the more I analyze it, the more I see how it's being looked down upon. But the changes that they're making, I think this one has a lot more potential than even where it is right now.
I think, who else is an investor in Citi? The Oracle from Omaha, Warren Buffett. So I didn't invest because of that. I just kind of, whenever I make a decision on a stock and then if Warren Buffett owns it, I'm like, oh, okay, cool. I got the Oxy on my own, Chevron. I could go down. He entered Google more recently. Well, I've been in Google for a while. Now, ideally, we make an investment and then our investment goes up in value, definitely, right? And it's almost like the market is raising our stake in Citi without us ever buying another share. And that's factual, which is, hey, my investment in Citi has doubled. And that's because I'm a dollar cost average investor, but I haven't bought a share in a long time. But the percentage of value, or I should say the value of Citi in my portfolio, the percentage continues to grow, and I'm fine with that. It's a solid
Yeah.
bank.
Yep.
I like having a combination of big caps, which are more predictable, more marketable, more investors buy them, so forth, and small caps and medium caps, right? In financials, I take good risk. I did great with Robinhood. You know, I've lost my shirt on a couple. eToro hasn't worked yet, but the ones that worked, it worked really well. PayPal has just been a dog.
I think Citigroup is second only behind Robinhood this past year.
All right, within financials.
Yep.
Interesting.
Yep.
Yeah, it's been and I love these boring stocks that kill it. I love, seeing that because, we don't have to take wild risks. You know, I'm 57. I'm not 27. And I know enough to appreciate a good growth stock. I know enough to appreciate a company that has a fantastic idea and is booming. But I'm 57. I don't want to wake up, with half my portfolio gone because a bunch of risky stocks just exploded. So Citi and, good, lists of stocks in my portfolio are pretty solid. And I'll take some chances, but I'm also going to have some pillars, underpinning my portfolio. I have Citi and others that resemble that kind of stock. All right, good stuff. Let's take a peek at the market. Market is flat. We're splitting hairs here. Okay, so Santa Claus is sleeping in this morning. He's getting ready to deliver toys tonight. And he's like, I can't deal with the stock market right now. Stock investors have to wait for me to come back after delivering toys before I'm going to keep the rally going. Looking at the heat map, now that we've opened, NVIDIA is giving up some of its gains. I think NVIDIA is priced well right now, by the way. I don't think it's going to smash, the performance record in 2026, but I think it's going to do fine in 2026. Apple's up higher. Micron's been tearing it up. Got a little bit of a rally going in healthcare just to open the market. Consumer staples are green. They had a red day yesterday. Some green around, computer hardware, semiconductor, infrastructure. And it looks like a little bit of risk off. Telecom tends to be a safe area. So we'll see what happens. It's pretty flat. So I don't think we're going to see anything overly interesting on the heat map. All right. So let me check the chat here. Looks like we've got some of our usual attendees, and I think Shadow Guy. I have significant amounts in BCS and UBS. Yeah. I think when we've looked at those, they had very good book values. I'm glad you've done really well with those. I don't see why they're going to do well next year. It's like, what's the big picture on the economy? It's going to be good for banks. All right. So we had a question from Daryl. I'm long on Uber. What about current negative tech trends? Thinking of adding more before year end. Can you take a peek at Uber on the technicals of Uber?
Okay, I'm also long Uber. and I'm trusting in the valuation that we've done that they are worth more than where they're trading right now, and the market is a bit displaced. So let's look at what we see with the chart. The first thing I see is a long-term trend that we established probably a few years ago. So at the end of 2022, and that is tested here in 2023, tested once more in 2024. In early 2025, we broke down below it in April. We traded back above, and now let's go back to just 1 year. So you can see this is a long-term trend. Well, let me go back there for a moment. We also have, let me even go more. Okay, so we have this auto resistance line set at the peak in 2024, the peak in February, and we broke above it. And now let's go to 1 year. So we're just now coming down to test this 2 or 3 year support resistance line. We did break below an upward trending, but keep in mind this is from the 2022, so 4 years. This is a 4-year trend line. We have broken below, came back and tested it, and was rejected. And we're coming down and testing this auto support resistance. The fact that it's finding a bit of support there is the reason that I'm staying in Uber at the moment, because they are underpriced. They're worth a lot more than where they're trading right now. We do have a support line set to this low in March. Broke below it during the tariff tantrum, and we didn't even break below this auto resistance line for long enough for it to even count yet, and we're trading above it today. The 200-day is still upward sloping, so even though we're in this shorter term downtrend, we're not in a long-term downtrend yet. The 200-day is still climbing. It is getting to where it could be leveling out. That might be time to be just slightly more cautious, but at the moment it is still rising. We have a 50-day that is declining, 21-day that's declining, and the 5-day, as of a couple of days ago, has stopped bottoming and is increasing once more. So the technical, or the price, if you just look at the price, it's been a little disappointing because it went from 101 and now we were sitting slightly below 80, and that's in a relatively short period of time. But from all these other technical levels that I'm looking at, they're still in pretty good shape. They did get to an oversold condition in the middle of November. This next pullback, the momentum wasn't quite as bad as it was here. So even though the price came down, the momentum wasn't quite as bad, at least on the RSI. On the PPO, it does look like it got a little bit worse. We had pretty much flat accumulation distribution. So that means we probably spent half the time accumulating and half of the time distributing if it's staying flat. We did increase a bit, and then there was some distribution, and we're currently in negative money flow, and we are in bearish territory because it is below 0.05, but it looks to be improving over what it was yesterday. So I still feel positive for Uber. I think the technicals are still okay. They're just facing a bit of negative sentiment from the market at the moment. I still think they're valued well, and the technicals look okay to me.
Yeah, I think Uber is going to be fine. Uber is, it's just kind of it's a stock that gets moved by stories and themes. And there are some pretty powerful companies that are creating stories that could impact Uber. Tesla, hey, we're going to be the greatest robo taxi company the world's ever seen, kind of stories. And a lot of investors believe in Tesla, and Tesla has pulled off some fairly miraculous kind of outcomes for the car industry. And investors have really done well with Tesla. And of course, we got Waymo from Alphabet. That's a big company. And so when they create stories, it really impacts Uber. But again, are the stories, reasonable? Is it? And that's where, we have to make a qualitative analysis, qualitative decisions, not quantitative, not, hey, look at the discount, look at, all these things, and really rationalize, is it really going to be feasible for these players like Waymo and Tesla to take over this massive customer base that Uber has? I don't think so. I don't believe that's the case. Just understanding that people are set in their ways and are comfortable with an experience. It's going to be hard. It's been hard for Waymo. Tesla really hasn't done anything. They keep saying that they talk a mean game. Like, they kind of use a football analogy. They talk like they're going to win the Super Bowl 100-0, but we've yet to see them throw a football or make a tackle. And it's like, guys, Tesla, why don't you operate in like 10 cities and then show us your user counts, and then we'll see if you're going to conquer this market. Until then, I just don't, use the Tesla stories as any credible threat to Uber just yet. And Uber has to keep, defending its market by innovating with robotaxi. That's a good idea. So I'm good with my Uber shares, and I own a pretty good position of Uber. Uber could be a good performing stock in 2026. Most definitely. Their valuation is excellent. All right, let's turn our attention to a company that is really small that Brucey wanted to take a look at, which is Hacksaw. These guys are in Sweden. They're a technology platform, game development company. Develops, distributes games comprising of digital slots, scratch cards, instant win games for private and state-owned iGaming operators. Okay. And it's a small cap. This is in the currency in Sweden. And to convert it to US dollars, we'd multiply this times 0.11. So it gets us to about 2 billion in market cap. It has a really low forward PE of 8.5. And it's incredible to see this stock sell off like this. When I look at their growth, it's like, whoa, they're growing really well. Look at the trailing 12 months, really good growth. So I'm thinking, man, small caps, sometimes they just don't get discovered. And these are in euro. Okay, so this is in euro. That's a pretty good chunk of revenue, 186 million. Okay. Earnings per share, they're profitable. Now, gambling stocks have gotten beat up. Like if you look at the gaming or gambling stocks here in the US, they've done terrible. And there's a whole prediction markets are going to take over, and it's hurting the gambling stocks in the US. But I don't think that really touches Hacksaw. They're I don't see why they would be affected by that. This stock, I did the calculation kind of, back of the napkin. And from a Swedish currency perspective, they're really worth the high point would be like 70 billion. The low point would be 50 billion. They're worth between 50 and 70 billion in SEK currency. They have a balance sheet that has mostly cash, very little debt. So this thing is super discounted. I know of like 6 stocks that look like this, and they don't rally because they're so small. It just takes some momentum, and this thing can really go up. This IPO'd, it looks like it IPO'd June 25th of 2025, and so far, not good. Fundamentals are there. And maybe they get acquired. They're really small, but super discounted. I just don't know when they're going to rally. It'd be your guess is better than mine because you're in Europe and I'm not. I'm over here in the US. I don't know if their gaming is super popular in the markets they serve. I'm not a big gambler. I don't, participate in stuff like this. So the stock looks really discounted based on fundamentals. Do you have any charts on this one? It's kind of a new issue.
I did in stock charts, so I can just use stock analysis. If
Okay.
you want to take a quick look at it, I'll just use their charting. So I'm not going to have all the signals and stuff that I would see in stock charts, but they found support at around this level back in September. Yeah, they're fairly new. Back in September, they've tested it here. They broke below. It looks like they're coming back up, and it was acting as support here and here, and broke down through the resistance, and now it's broke down through support. Got to get my brain going this morning. And now it's going back up and facing resistance at those same levels. The RSI is a relatively low level. It's actually in bearish territory at the moment, but it is improving. So it wouldn't surprise me for them to break out above this particular level. The MACD is in bearish territory as well, but it looks like we may be having a bullish crossover in bearish territory. So they are struggling a little bit here, but it looks like they could at least break out above that level. Then they have, this is probably it. This is a 20-day moving average. That's going to act as resistance. It's been trading below that for basically most of November and December. A couple days they were above that. And then not long after that, they're going to be facing the 50-day, and the 20-day did cross below the 50-day. So your moving averages are not in the proper order at the moment. So that's about all I can say on this particular equity.
All right. Thanks for doing that. The number one performing stock in my portfolio, it's just 22 minutes after the open is Citigroup today.
Yep.
Up 1.64%. It's low volume, but it looks like investors are buying this one up today. I think that's going to make their year-to-date number just increase 72.4. All right. Go Citi. I'm going to update my research on that. And using the new price to book, average price to book. All right. So so far, the market's still somewhat flat. No big news to report, I don't think. Low volume day. All right. So no other questions, right? Let me double check. So we got that. So I think okay, so the lockbook, and you're talking about hack. Yeah, if the lockup is expiring, and I think early investors and employees could then sell their shares, you may see some additional selling. It's a tricky one. Some of those small caps, that's why small caps are really unpredictable. The market may never notice them. If you catch one and you get the right one, boy, it could really be an awesome return. So small caps, difficult. Rewards are high. Hey, Paul, good to see you. Daryl, when do you think SPY might touch the bottom trend line that it reached in 2009 and 2020? Are you concerned we trade at upper trend line now? What concerns you, Daryl?
So I have a chart on that. So this is a chart that I've shown before, and I expressed my concern that we are trading at the upper end of this trend channel. And here's the lower end that I think you're mentioning. So in 2009, we did hit that bottom. We touched it again in 2020 during the pandemic. This was a great financial crisis. Am I concerned of it going down to touch the bottom end of the trend channel? I don't think we're going to have another 100-year pandemic in 5 years. So I'm going to take that one off. We have faced a couple banking crises in the last few years that were pretty short-lived. The Fed stepped in and circumvented those pretty quickly. Since we had the 2008, 2009 crash, we put in a lot of financial guardrails to prevent that kind of stuff from happening again. So I'm going to rule that out. So 2020, okay. So nothing else, we've even come below the midpoint. So that would be my best guess. I think the bottom trend line getting to there would be pretty low probability. The middle of this trend channel would be probably below 50% over the next year. Over the next couple of years, it could increase, and we would need to come down and test that once more. So if I understood your question correctly, that's what I'm thinking at the moment. This has worried me for a little while, that we're up at the upper end of the trend channel, but not enough to change anything that I'm doing right now.
Yeah, and I don't see, I mean, if we have, I think that'd be a good segue into kind of a segment I wanted to lead. So we have the stock market's doing well. And that's an understatement. The stock market in certain places is doing fantastic. Nvidia in the last 3 years up 1,100%. Broadcom 532. And where I'm going to go is we're in an expensive market. Shouldn't have to like convince too many people that, yep, you go up 3 years in a row. Making a statement like that is probably has a little merit. What can kind of spoil the stew? What can take us down is if AI spend stops, or it's communicated that we're going to turn the spigot to half volume. Okay. We're not going to have the spigot at full blast. We're not going to have like just gobs of money being thrown at the data center. And that's realistically something that can happen in 2026. And I'm specifically looking not at the earnings that are coming up at the end of January and in February. I think those earnings could have some messages in there. A message that I'll cite from 2025 that make me think along these lines is Meta came out and said, hey, look at us. We're spending all this money on the data center. And their stock got crushed. And that's Meta. Okay. That's like a big cap, lots of money. They got good things going on too. And the market's like, whoa, yeah, we're out of here. And they got crushed. So in the earnings that are basically, I'm going to say two cycles away, which is really in the April, May timeframe. That's the one that I'm focused on and seeing what are Microsoft, Google, Amazon, Meta, and anybody else who's like really a big consumer of data center. What are they saying? Are they saying, yeah, our data center is big enough, or our data center footprint estate is big enough? We should be able to have slow growth in investment with CapEx. That is going to send some stocks over a cliff. And we should see pressure on NVIDIA, Broadcom, semiconductors. But the canary in the coal mine are going to be these neo cloud stocks like CoreWeave and other stocks in this space. I know Brushi's out there. I think he did really well with Nebius. So these are not comments I'm saying for the first time. I've made these comments before, that this is a risky market, because if AI spend goes down, the first ones are going to be hit are these stocks, because the other big companies, they tend to have these really big agreements with big corporations where they're like, oh yeah, we'll handle all kinds of workloads. We'll do this, we'll do that, and we'll do AI for you. But these neo clouds are like just handling AI. So if there's a pullback, these are going to be the first ones to really get hammered. Now, recently, we had a little bit of a, hey, companies are pulling back, might be pulling back. So it was kind of a little bit of a trial run. And you see that a lot of these stocks did get hit. Now, these stocks are having a good year for the most part. I mean, look at Nebius, just killing it, 221. CoreWeave, 97. Core Scientific, not as much. DigitalOcean, not as much. But you can see that even Nebius had a nice sell-off. So these are going to be kind of canaries in the coal mine for me. I don't own any of these. Now, the way that I've played AI is, I decided, I think AI, I'm using Gemini quite a bit. I think it's real. It's going to be, I think it's going to be something that the future is going to use. And I'm playing the long game. I own Google's my biggest position. They have a huge cloud infrastructure business. If big companies want to do AI, they are probably knocking on Google's door and listening to what they have to offer. And of course, Amazon has the biggest cloud infrastructure business on the planet. So I'm invested in these two, and I'm invested in Alibaba. Alibaba is the biggest cloud infrastructure provider in Asia. So the long game being, these companies, if AI flourishes, these companies flourish. It just is going to rise. The tide is going to raise their boats quite a bit. and it's lower risk than going with neoclouds. Now, neoclouds could be fantastic rates of appreciation, but I like this chart here, but you see that CoreWeave really been giving up a lot of their stock price over the since June. It's been kind of going down, and things are very volatile with CoreWeave. So I wanted to kind of take a look at these stocks and kind of point out, some things that look quite impressive, like their growth rates and so forth, but also where the risk, in my opinion, is in these stocks, and where I'm like, whoa, this can get really ugly really fast. So this is relatively a small cap, 40 billion, and they don't have any profit yet. Analysts think it's really discounted. Their growth is fantastic. But when we look at, and they just IPO'd, so I don't get a lot of history. So the growth is really fantastic. Now let's look at margins. How much money are they making? So gross margins look really good. Now they're kind of getting their feet on the ground, so they're not making a whole lot of money right now. They will eventually do that. They're using a lot of cash flow to put, the GPUs in the data center so they could then offer these cloud services to companies that want to use them. That makes sense. Totally makes sense. Looking at their balance sheet, they're taking on debt to grow that data center. That's always risky. Having debt, if revenues go down for any reason, you still have to make your debt payments. And their credit rating is probably not very good. Debt to EBITDA is 6.27. So there's where the risk is. It's on the balance sheet. This is a risky stock. They're not making any cash flow, so it's kind of a double negative. You owe a lot of money, and you're not creating positive cash to pay it off. So these debt holders are going to have to be patient with them. Will they get big enough to grow into that debt? A company that did take on debt and they grew into it was Broadcom. Broadcom acquired VMware, and they borrowed like 40 or 50 billion dollars. But they got so darn big that it's no longer like a big risk issue because they're much bigger. These guys, if they get big, the risk in that balance sheet is going to go down. But for now, it's a risky stock. And again, this stock here, if there's any kind of bad news on AI spend, and if there's real numbers coming in saying, okay, AI spend's not going to grow, this stock's going to get hammered in 2026. And the whole pausing of the AI spend could be the reason why we have a negative, year in 2026 or 2027, because AI spend represented, I think when they look at the numbers for GDP growth, I think GDP is growing by like 2.7 or something per year. Well, a full 200 basis points of that number is AI spend. It's like, if you didn't have AI spend, we'd barely be growing as a country. So you remove that, then we've got like a lot of things kind of fall apart, especially the neo cloud stocks. So the stocks, and I see your comment, Paul and Benton. I'll get to it in a minute. Nebius has been fantastic. This thing is 225%, 5-year. Wow, look at this chart. Really got crushed. Then it really rose. Man, look at this rise. It went from $20 a share to $129. And they locked up some contracts. I forgot with who, Meta or Google. That's another piece that to me is a clue that even the big players are beginning to get nervous. Microsoft is a good example. Microsoft's, instead of building their own data centers, they started to lease out space with other cloud providers. And I believe, and Meta's doing the same thing, they're doing that because they're like, well, it could be risky if we build out a data center and then we don't need it. What do we do then? It's like big write off. But what if we just lease out or make agreements to take on, some cloud infrastructure? We don't have to spend, capital. And when we get there, we'll either cancel some contracts and pay some cancellation fees or be able to walk away in some form. But the risk is much lower because the risk is transferred to whomever has to build the infrastructure. So that's another sign to me that this thing's beginning to get riskier and riskier over time. When we had the .com build out, there was a lot of building, right? So we had networks and we had fiber optic cables being laid down, and the companies that did it were right. We did need fiber. We did need all that bandwidth. But where they were wrong was the timing. It took many, many years for us to use that capacity they laid down. So it was just overbuilt. They were right. They just needed to wait 15, 20 years to get the return on investment. And that is a very poor return on invested capital, which means that their stocks got, murdered. And I don't know that we're getting anywhere near where we got with fiber optic networking, but I think this is one of the riskier parts of the market. And it is a part of the market that's going to tell us a lot about where we're going from a technology perspective. The technology sector is companies like Core Scientific, CoreWeave, Nebius. I'll be looking at these because I think they're going to be the canaries in the gold mine, or they may, continue to flourish. They may continue to be like, wow, man, incredible, 236. These will be the tip of the spear. And judging from like the attention these stocks get when negative news comes out, I think I'm not the only one thinking along those lines. So I don't know if you had any jumping off points on that kind of segment there, or we can move on. It's up to you. Did you have any charts you wanted to show?
I only have one on CoreWeave just
Okay.
to see where we are. So I don't know if you could have picked a worse time to go public.
I know.
Right before the tariff announcements, but they did really well afterwards. But they've been on a decline since the 23rd of June. Got it connected to a couple extra points here. So to break out of this downtrend, they need to get above this downtrend line. This one's so new that we don't even have a 200-day moving average yet. The 50 is declining. The 20-day tried to start moving back upward, but it's rolling back around. I'm looking at this black candle right here. And whenever you see that and a big wick on the top of it or a big spike on the top of it, that usually means you're going to see a little downturn. And sure enough, we had a downturn the next day, and we're even lower today. We have support, very short-term support at this $63 level. It's been tested twice and was able to bounce off of it. So the RSI is in bearish territory, and the PPO is also in bearish territory. Money flow is positive at the moment, but it'd have to break out above this trend line before I got too terribly interested in it.
Okay. All right. So question came up on Google. I've been a Google stockholder for some time, like, geez, 6, 7 years, but I've bought more each year, and now I've got my position in Google. I even bought like Google during this phase, right? Because they started to sell off before the whole tariff, sell off. And in this era, I was just like shaking my head, going, "Man, this market, it's just kind of kind of like nonsensical, illogical. How could you be discounting Google? They are doing so well because you look at their fundamentals." So I bought more shares, and those shares did really well. So it's it's an accumulation over time, and I don't know that Google's going to do all that great in 2026, but I'm not selling any shares. This is going to be the most valuable stock in the exchange in the next couple of years. I think they're number 3 or 4. They will be number 1. Their business is just so loaded with good businesses. So that's my position on Google Alphabet. All right, so Benton, you're glad you got into Arista Labs. Just remember, man, it's a roller coaster. It is going to be a roller coaster. Whoa. So I'd be curious, can you do the charting on Astera Labs, Arista Labs. Astera Labs. I'm combining companies. Maybe Arista Networks acquires Astera Labs and they rename their company. But all kidding aside, this is Astera Labs. And they had a beautiful rise, but have been trending down. I'm looking at this. I want to see your expertise around this stock, because this actually makes me a little nervous. I'm like, what the heck? It has had a good recent run. Last month is, you see that volatility, but it's had a 15.4% rise over the 1 month. And yeah, there's spots to buy this stock for sure. You can buy it at these drops and make some money. I'm just nervous that the overall trend is down. And I mentioned that if we have a stop in AI spend, and it could be a slowdown. It could be we're not going to spend, gobs of money. We're only going to spend a little bit of money. That's going to be bad news for Astera Labs and NVIDIA and CoreWeave and everybody else that's getting all this revenue from this excessive spend in the data center. But could you take a look at the technicals on Astera Labs?
So the downtrend is a short one, and it's not confirmed because the 200-day is still increasing. So we're not in a confirmed downtrend, but we're definitely in a short-term downtrend. We have this longer-term support resistance line acted as resistance back in early January. Broke above that in August, traded above it, came down and tested it once, twice, 3 times, actually broke below it a little bit here. And right now, they have managed to break out above this trend line, and they've been above the downtrend line for 4 days with hollow candles. That means it's opening low and being traded higher throughout the day. So 1, 2, even on this one where it opened lower, it still traded higher throughout the day. So throughout the day, you have buyers stepping in, and that's what these hollow candles are. If it's a solid candle, then that means you had sellers all day long. So that's what those are telling you. The 21-day was decreasing until about 3 or 4 days ago, and now it is back on the rise. And it's also above the downtrend line, along with the 5-day moving average is above the downtrend line. So this is starting to look like it has broken out of this shorter term downtrend. The RSI has really not managed to get above 60. Here, 2, 3, so 4 times. The last 4 times it's tried to break out above 60. It has not been able to do that. So one of the things I would be keeping an eye on, since it has broke out above this downtrend, look to see if this RSI can also break out above 60 and drive higher. We did have a RSI that got overbought in August and September. So if it does that again here, then we're definitely above out of that downtrend, short-term downtrend. The PPO is in bullish territory at the moment after being in bearish territory since the October 14th. Been in distribution mode since October. See, the money flow is negative. We had one day where it went positive on December the 11th, and it's been positive since the 19th. So every day since last Friday's close has also been positive, and it has broken out above 0.5 above that. So it's in bullish money flow at the moment. So this one could be set up pretty nicely here.
Okay. Yeah, I'm gonna keep holding it. It's like a 1% position in my portfolio, but it just I've already got my capital back because this thing could. I mean, this is a nice. Um, well, how could I put it? It's an ulcer starting kit. This thing can really drive you crazy. It's like, whoa. If I had like 10% of my portfolio, I'd be like, oh my God, it's too stressful. All right. So we had a couple of questions that I wanted to chase down. First one is around mamas. And Paul, looking at Mama, it's $560 million market cap company, revenues of 151 million. And the stock's been just flourishing. And that's an incredible rise. It is a small cap, forward PE of 64. Now, the growth is really good. Almost 20% last full year, and they're actually accelerating their growth up to 30% in the trailing 12 months. So that's really good growth. But it's not a very profitable entity because they're in the food business. So gross margins are at 25, profit margins at 3, free cash flow at 4. So that's not anywhere near fantastic. It's probably closer to bad. So that's a limitation. And looking at the trailing free cash flow, their debt versus cash is about 1-to-1. So I don't need to take that into consideration. This business is worth at best about 180 million. And they're way up at 560. It's like, not sure what investors are buying into. Maybe a lot of people like their food and they're like, yeah, I'm going to buy the stock. All right, good luck. It's a small cap. It's really risen high, and I think it would not be something I would touch. It's super overpriced. Don't have fundamentals to match their current valuation. And they're not in an industry where, hey, they're going to be able to move their net profit margins to 25%. No, that's their gross margins. When you make meatballs, you have to buy the beef and the pork and whatever else you put in there. You have material cost. You have labor cost. You're never going to be a highly profitable company. You can keep growing. You're small. You can make a dent in the overall marketplace. But this one here would just be not an investment I would touch. There's just good stuff out there. I'd rather go into like a biotech company that has really good upside. And the gains are in the stock. It's kind of like if you invested here, you're killing it. I would definitely, if I had bought here for some reason, maybe I was a big fan of the company, I would have probably sold here. Just the fundamentals don't look good. So that's my comments on mamas. Chime. So there was a comment on Chime that they're going to have good growth next year. They are going to have 20% growth, which is good, but not awesome because they're small. I do think Chime is a good stock. They're not overpriced. Okay. They're just an IPO stock. And I like to give these a little bit of time to report a couple of earnings reports, maybe get me 3-4 years of data. And then I'll be good to see if this business is really gonna make it happen. They are hitting profitability. Overall, I have a discount on Chime. I think it's a good business. I'm just being careful with it because it's an IPO stock. Those IPO stocks can really go down for a while. So I agree with you. Chime is looking good. They need to accelerate their growth. Yeah, maybe they do like that mama ticker name, huh?
Comfort Food Squared.
Yeah. You know, the spaghetti sauce Rouse. I don't know if you're familiar with that brand.
Yep.
But that is like the best spaghetti sauce, I think. And my wife uses it. And that stock did okay, but I never invested, but it did okay. Yeah, so thanks for the sentiment there, Shamba Basher. Merry Christmas. All right, so let's see what's happening with the stock market. It looks like Nvidia is going down. Micron keeps going up. Broadcom's going higher. CRM's going up a little bit. Healthcare's doing okay today. What's happening with NVO? They had a really good day yesterday. And now they're up 2%. When do you think NVO is going to start rallying higher?
We can take a look at it and see.
Yeah, could you? Because that sucker is discounted for sure. It's just the market thinks NVO is going to have more problems or something.
Yeah, so they are in a confirmed downtrend. The 200 days declining, and we have two downtrend lines that we've drawn. Has broken out above the lower one, so that's good news. It's never even come back down to test that. The 50-day is declining. It has broken out above that 50-day. So the real test to me is getting above about 60, 59 or so. Maybe by the time we get out here, it'll be 57 or 58. But that's what it would have to break out above that and maintain it through at least a Friday close before I would say, okay, we're out of a short-term downtrend, and the 200-day by that point could also start moving a bit higher. So as long as it's in a downtrend, I'm not interested.
Man, it's been a tricky one. You know, their business is easy to understand, but boy, it has had a sell-off for a year and a half.
Yep,
For the
it's been a
ages.
long time.
Yeah.
Money flow, even though they're getting these bumps the last 2 days. They had really good volume yesterday.
Mm-hmm.
In fact, their average volume is 17 million 9 million shares, 9.5 million shares, and they traded 17 million, 18 million. So on a holiday week, that's big volume. Let's see, we're an hour into this trading day and we have about 2.5 hours left. I don't know if they're even going to hit average volume today. And these both are black candles. So that means people were exuberant at the start of the day and you had sellers for the remainder of yesterday. We could look at the intraday and prove that. So people bought high and it sold off for the rest of the day. So that's what that candle tells you without even having to go and look at the intraday chart. You can tell what it was doing. The RSI is above the 50 line, so they did break out above their previous high on the RSI. The PPO is positive at the moment, but I don't think there's enough. These two black candles still have me worried, and money flow is negative. So,
all right.
I'm cautious. I'm still cautious on this one. It would have to break out above this line and hold it until the Friday close before I would even think about getting back into this one. I'd rather pay $57 a share for it than get it for 51. I think the risk is too high, in my opinion, at this moment.
Yeah. It's definitely a tricky one. I think if it keeps going up, I might have to buy some shares. I think it'd be a good decision to buy some shares. But like you, I need to be convinced because it has really just been an incredible drop from mid 2024 to now. It's just been a real big loser. So we'll see if they can get back because they're growing, they're profitable, they even pay a dividend, they generate great free cash flow. It's just when is the market going to start buying it up? That's the big question. The other piece that I think there's probably some stranded investors that would probably be selling once it reached a certain prices if it did start to rally. So that's also on my mind. Okay, so that is it, folks. Anything you want to mention around your channel before we?
Nothing other than what I mentioned on Monday.
Okay, and yeah, I'm gonna probably shut things down in a couple hours and take care of some things at home, and then I'll be back to streaming with you on Friday. Okay. Everybody, we're gonna stream on Friday, and we'll see what kind of trading we have on Friday. Today, what is the market doing here? The Dow's up a little bit. S&P is up a tiny bit. NASDAQ is under a tiny bit of pressure. Nothing big. So we shall see what Friday brings. Today seems like it's going to be a flat, low volume day. We've got a couple hours of trading left, 2.5 hours of trading left. And then we will wrap up the day and then come back on Friday. All right, everybody. Merry Christmas. Have a terrific evening. And we will talk to you on Friday if you can make our live stream. Take care, everyone.
Take care. Merry Christmas.